Let's take a look at AMC stocks and what happened this week. I'll definitely show you my portfolio. Let's also review all the trades I made. I rolled over options to the next week and I rolled them over with a profit. As we can see, I rolled over an option with a $4 strike with a profit of $15 per option. There were 3 of them. I also rolled over with a $4.50 5 with a profit of $11 per option. Additionally, I rolled over options with a $5.50 5, also with a small profit of $4 per option, but there were 10 options, so $40 in total. I also sold an additional option calls for next week. Again, this is all within the framework of managing my portfolio of AMC stocks, which I've been holding for several months now. Here are all my positions, as you can see with the market about to close in literally a minute. Interestingly, many of my options are closing with a profit, and we'll just sum up and review the results for the past week. I'll show you how much money I managed to make. Here's some very interesting information. But first, I'd like to talk about volatility, what's happening with this company. As you can see, volatility has increased recently. It's currently at 120%. Also, this is related to the upcoming report, which will be in a few weeks. Again, I'll be eagerly awaiting the report. We'll look into it, see what happened. What's the outcome? AMC stock closed at $3.41 one. I'll definitely note that in my spreadsheet, where we use a strategy based on AMC stock bypass. Let's see what happened this week. Okay, let's move on to volatility. Let's look at the volatility smile. What's happening? As we see, the volatility smile is increasing, both towards calls and towards puts and towards decreasing. But volatility is increasing more towards the downside. Actually, the fact that volatility is increasing towards the upside is also good. It suggests that there might be a shift and AMC stock might start to rise more seriously. Let's also look at the historical implied volatility, the gray line of this historical volatility. The white line is the implied volatility. At the moment, the implied volatility is much closer to its historical highs. So from this, we can conclude that we can play the volatility movement. I always tell you that besides stocks themselves, you can also play the volatility. In fact, it's even more interesting. And I do it too. I'll definitely tell you a bit later. Actually, part of the options already closed today. But as we see, we have a very large wall at the $3.50 $03 strikes. And both call options and put options are simultaneously at very high volumes. And as we can see, I've already mentioned that the key level will be this $3.50 zero. I also mentioned this in the previous video. Let's listen to it. Huge support walls. We couldn't overcome it at first, but today we're surpassing it. If we close above this value on Friday, it's very good. We still have $3.50 5 of us. If we surpass it, then the road to $4.50 5 open. Some more significant movement could occur, either up or down. Again, the volatility is slightly distorted now because trading has already closed. Let's immediately look at my spreadsheet where I record every single entry. I remind you that the experiment started at $1,000 and my task is to beat this stock through skillful position management. Also, I remind you of my philosophy. I can't predict price movements. I solely act based on mathematical analysis and skilled position management. I always disclose which positions I open and which ones I close. Let's see what happened this week. The earnings have been quite substantial, very significant. Firstly, I closed several options. Let's take a look at them right away. They are in my portfolio. They're still open, but they'll close tomorrow. As we can see, I have 5 options with a strike price of $2.50 zero. I also have 5 options with a strike price of $3. Additionally, I have 15 sold options with a strike price of $3.50 zero, and I also have 5 options with a strike price of $4 also sold. So I sold 20 options in total, but I remind you that I have insurance on 1,600 shares, so these are not just naked options sold, but rather with insurance. Again, as you can see, I had a large volume of sold options at the $3.50 zero. It might seem very risky, especially since the price was very close, but again, for me, it's not risky. Why? Because I saw these volumes and understood that either we would surpass them, which we didn't, so I sold this volume. Let's continue looking at everything for this week, and we're closing all these positions in profit, meaning they brought me the entire premium. These are the 5 options sold with a $3 strike, and the 5 options sold with a $2.50 zero. As we can see, I've now locked in a profit of $2,000 on AMC. Of course, I'm very pleased with this. That's what's called skillful position management. I'm showing that some of my positions were experimented with, and there's nothing wrong with that. Everything is fine, and I continue to accumulate and accumulate. Therefore, soon more positions will close for me. I'm adding new positions. That's how it works. Let me summarize for this week. Today is April 26th. AMC closed at $3.41 one. I'm jotting it down here immediately. In addition to previous profits, I'm also adding the accumulated profit for this week. Let's look at the results. Initially, during the experiment, my portfolio grew by 9%, while AMC dropped by 18%. Even with the fall, I'm making $900 while AMC is losing almost $2,000. So the gap from AMC widens to 27%. Let's take a closer look at the graph. The blue line represents my position, while the red line represents AMC. As we can see, my strategy is performing exceptionally well. Again, I don't just talk about positioning the portfolio smartly, I actually show how I do it live, recording all the transactions. It's also important to note all the information about the options transferred. There was profit there too, which I'll definitely add to the table. Returning to AMC, you understand the logic. I don't know how to predict price movements. My task is to manage positions skillfully, and that's what I do. I also remind you that I don't believe in any hyper short squeeze. Many bloggers just deceive you. There won't be any short squeeze up to $1,000 or even $100 because there has been a very large share issuance. Yes, I admit that AMC will grow to $10, but I don't believe it will go higher. Unlike bloggers, I show you how to manage positions effectively and make money on this stock. Here, anything is possible. But again, what if I'm wrong and a short squeeze does happen, my friends? Well, I'll still profit nicely because I have purchase protection in the form of options for this stock. So even if the stock rapidly rises, I'll still outperform it. That's what's called smart position and portfolio management. I believe I've explained everything in maximum detail. As for further details on position management, I'll explain that later because I know how to do it and will share it then. I always show you market expectations. We can see that the market forecasts AMC to be priced between $3 and $3.50 5 months. That's the most likely scenario. I've already talked about that. I don't think there will be any significant movements until the earnings report, but again, we'll play it and profit from any eventuality. That's my philosophy. Also, I recommend you watch my new video, which focuses on preparing for a completely new experiment I'll be conducting. There I explain how to properly structure a portfolio and how I'll be doing it. The logic behind this portfolio experiment will start very soon. Everyone can follow along, seeing everything I buy and the strategies I employ. In short, everything will be transparent. In this initial video, I explain my logic for building the new portfolio and the new account will open from scratch. Good luck to everyone.